Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Tuesday, October 15th, 2019, and we are again in the final hour of the trading day. The way that I view the market is that during the regular trading day, you have the algorithms, you have the day traders fighting it out, battling it out, moving the prices around. It's a lot of noise. I don't put a lot of weight on those prices. At the end of the day, you have the market makers, you have the large financial institutions coming in. They take control from the market maker, they take control from the day traders and the algorithms. And in my opinion, move the prices to the correct and most valid prices of the day. They're the smartest, they have the most technology, they have the best information, and so I like to make the majority of my buying and selling decisions based upon what they're doing, and what they're doing is in the last hour of the market, and ideally the prices that are as close as you can get them to the close. So that is why I make the majority of my buying and selling decisions at the end of the day and not during the day when you have the noise. So let's take a look here. Hey, I appreciate everybody coming by. I really hope that the information on this podcast is helping you with your trading, helping you with your investing. And I really do appreciate you guys coming by each day and investing your time with me. And I hope it's paying off. I hope you're getting some kind of good return on your time investment. So anyway, let's see. Hey, Jackson, what's going on, brother? Good to see you. Jackson says, morning, afternoon, Greg. I know it's not. Let's see. What time is it there? It's in the morning. I know that, early, right? So thank you for coming by, Jackson. Appreciate it. I did get your message, and yeah, no problem. When you are ready to go, you just let me know. All right. So thanks for coming by today. So the bulls are out in force today. We're having a really, really good day. The Dow Jones is up 273 points. It's up about 1%. The NASDAQ is up 103 points. It's up 1.28%. And the S&P is up 31 points, almost 32 points, about 1%. We had some good earnings this morning. We had JP Morgan come out with earnings. We had United Healthcare. They were strong, and that seems to have moved the market up pretty nicely. So we are fortunate to have some really good positions here, so I'm thankful for that. Let's take a look here. Hey, JT, good to see you, sir. Thanks for coming by, JT. Always great to have JT, and let me know what's going on with your trading, JT. I always like to follow your trades. It's 6 a.m., Jackson says. All right. So, all right. Well, listen, the plan for today, as per usual, first of all, we're going to go ahead and we're going to run that U.S. legal disclaimer. It's about 40 seconds. We're going to come back. We're going to take a look at all my current positions. We're going to talk about when I bought them, what method I used to buy them, and then how I'm going to manage the trades going forward. So when I bought them, why I bought them, and how I'm going to manage the trades either to the upside or to the downside. After that, we're going to do a few minutes on trader psychology. And I know I beat you guys over the head with this every day, but guys, it's so important learning the technicals, learning how to trade, the charts and the indicators. Yes, you do know how to learn that for sure. But after that, it's a whole different story, and what's going to determine whether or not you're a long-term successful trader is whether or not you can manage your emotions, whether or not you can do things that you don't want to do or not do things that you do want to do. That's what trading comes down to. Not becoming destabilized, not getting too depressed, not getting too euphoric, not getting too frustrated with trading and then putting on too large a position, or if you went from, if you had a losing streak, not taking the next position because you're like, I don't want to go through this again. Well, that's probably the trade, that's going to work for you. So stay even keeled, stay stable, position size correctly so that you don't destabilize yourself. If I could recommend one thing to anybody, if you position size correctly, no matter how bad things get or how good things get, you're going to keep even keeled, right? Like in Pulp Fiction. I can't remember that, but there was a part in the movie where Samuel Jackson's like, be cool, babe, or something like that, stay cool. That's what we need to do. So that is why I do like to, spend some time each day talking about trader psychology and going over that, because, I hope over time, if you hear it every day, it really will sink in to you. Now, for those of you who have never traded, you might be thinking, what is he always talking about? That doesn't seem like something I'd have an issue with. But once you start trading, I think you're going to go through it. I've never met a trader who hasn't gone through it, but the people that stay around for the long term are the ones that control their emotions, position size correctly. You're going to have ups and downs, but they stay in it for the long term. Remember, we want to look at trading as a long-term endeavor, not get too concerned about any one trade. Each trade, one of the next 1,000 trades. So anyway, we're going to do a few minutes on trader psychology. Then we're going to come back. We're going to take a look at my stock, all the stocks in my watch list. We're going to go down through each stock one by one, and we're going to look for some kind of signal. And the signals that I use RSI, I use MACD, I use moving averages, I use ATR channels. I look for entry triggers. Right. And, if you want a stock to go up, everybody, you have a much better chance of having a profitable trade if there's other buyers that come in at the same time as you do. And, the way that I look at indicators as groups of buyers, and the more buyers, the better. So therefore, the more indicators you have lining up at the same time, the more potential buyers you're going to have, and the more likely you're going to have a winning trade. So that's what we're going to look for. We're going to go down. We're going to take a look, possible candidates. We're going to mark them. At the end of the day, we're going to go through that list of candidates with a little finer tooth comb, and we're going to try to mention what's good about it, what's possibly bad about it. Look at the risk to reward. Keep in mind that we already have some positions, so correlation may be a factor. So these are all the things that you kind of have to decide at the end of the day before you place your trade or not place your trade, depending, on the math that you've done in your head on, is there more positives here than negatives vis-a-vis everything else, like correlation, right? And risk to reward, and how many positions you have, right? So, and then at the end of the day, if I find something, I will take the position. If not, I won't. And then after the market closes, if anybody has any questions, please let me know. I'm happy to clarify anything I discussed today that I wasn't clear on. If you have any stocks that you'd like me to take a look at, that would be a good time to do it after the market closes. However, if you have a stock you think that would be important for the group to look at today before the end of the close, please type it in the chat. Maybe put a star by it, or say, like to see this before the end of the day. And that way I can prioritize what I'm going down through. So, all right, well, that's the plan for today. So if you guys could hang tight, I would appreciate it. And I'm going to run the U.S. legal disclaimer. I'll be right back, about 40 seconds. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, so, hey, Steve Burns, what's going on, my friend? Always good to see you here, Steve. Always appreciate you coming by. I'm always excited to have you here. I know everyone else is, so thank you so much. Steve says, I'm happy to say I am at all-time equity highs today. Congratulations, my friend. That is really great. I had a feeling you might be, and although the market hasn't closed, I am happy to say that I am at yearly highs today as well. But we don't want to jinx it, right, Steve? I knocked on wood. Hopefully that will help it out. So congratulations, bud. You're a master trader and such a great mentor and author. And thank you for everything that you do, Steve. It's really improved my trading over the years, I can tell you that. So thank you so much. Bing He, hey buddy, how you doing? Good to see you, sir. Bing He's our friend from Singapore. JT said, Swing IBB, bought yesterday and sold today. Let's take a look. Beautiful. Beautiful JT. Great trade, 1.77% off of its high a little bit. Rejected the 50-day moving average to the upside. So if I was in that trade, I may consider taking that off as well. Although today it looks like we may have a 520 crossover, and so we'll have to discuss that. But congratulations, JT. OC hit the second ATR today. Bing He says OT hit the second ATR today after I cut my loss yesterday. Now SEDG is coming down. Need to cut loss later. Market going up without me. Yeah, I looked at that trade, Bing He, on OC, and I did realize that you got out. But listen, keep in mind you got out yesterday when you were supposed to. You had to close below the previous day's low. That was your plan. You followed your plan, and that's good. You know, is it frustrating when you get out and next day it goes up? Of course. But that's part of trading, right? That's happened to me at least 362 million times. So after a while, you just get used to it. But, you know, don't get frustrated. Don't get destabilized. You followed your plan. You know, take some consolation in that you followed your plan, and, you know, keep following your plan. So it's all right, man. You'll have other trades come along. MJ says, be cool, honey buddy. Oh, that's right. That's right. Thank you, Paxton or Jackson. That's right. Be cool, honey bunny. Be cool, honey bunny. Right. That's what we got to be. We got to be cool, right? When things are going crazy. Anthony says, hey all, it's amazing how easy trading is on days like today. Good job, Steve Burns. That's right. Yeah, it always seems easy when it's on the way up. But I can tell you something, Anthony, you really don't learn much on days like today. These are great, right? These are the cherry on top. This is what we're waiting for. But in reality, you learn more from down days. You learn more from things like Bing He when he had to take his loss and then it went back up, and to try to, you know, not get too down about it, and stay cool, honey bunny, right? But we learn more when we're losing and going through drawdowns than we do when we're winning. Although, of course, it's great to win, no doubt about it. But just wanted to point that in. Hey, put that in. Hey, Mount Doji. Hey, everyone. Finally back from vacation. Oh, awesome. Where did you go? Good to see you, my friend. Hope you're doing well. And let me know if you have any trades on. Jackson says, Steve, purchased and read Moving Averages 101 twice. Recommended by Greg. Great book. And thank you for this Meat and Potatoes book. Such a great book, guys. If you guys haven't read Moving Averages 101 by Stephen Burns, you should do it. I've read it so many times I can't even, recall how many times. I don't know, 9, 10 times. And that's actually a long time ago. That's what got me in contact with Steve. Matt Doji is in Cabo. Now feel fully recharged. That's awesome. Nice, nice, nice. I've never been to Cabo. All right, well, let's get to it. So, I did buy Amazon yesterday on the 14th of October. I bought it because we had moved into the value zone from below, moved into the value zone. The day that I bought it, we washed out the previous day's low, closed above the previous day's low. This is a valid V1, higher low V1 signal. In addition to that, we closed above the 10-day moving average, which we had not done for a long time. So that is always a good sign. That's an indication that something might be changing. So, this was a really good trade. My risk on this would have been a close below halfway of the washout bar. So, if I was wrong, I'd be wrong theoretically from here to here minimum, right? But I decided to use the 200-day as my ultimate profit target on this trade here. And you can see we had a great trade, hit 3 profit targets on Amazon today. So this is great. This is great. I'm out of probably 70% of these shares. And the reason why is because I took it a little bit higher RSI level and I reduced my profit target a little bit down because I took it at a weird place. I took it at like, let's take a look. 44 RSI, right? So anyway, so when by me getting out, I'm getting out larger and larger positions, but that's some math that I do with my phase out. It's a little complicated to go into this right now. But anyway, hit 3 profit targets, is off of its high a little bit. In addition to that higher low V1 with the close above the 10 day, we also had the MACD crossover. So we had a V1, we had a close above the 10 day and a MACD crossover. So this would bring buyers in, and in this case, it really did. So this has been a great trade here and hit 3 profit targets. Boeing is our one stinker today. I did buy this back on the 11th of October with this higher low V2. Here is day 1, here is day 2, here is day 3. Day 2 washes out day 1, day 3 closed above day 1's close, back in the value zone, higher low. This is all good. Next day we did go up, hit 1 profit target, and then reversed. But my stop is a halfway of the washout bar. This was the washout bar right here. And so if we close today below 372.30, which it looks like at this point we are, I'm going to go ahead and just take that loss. So Boeing is not participating in the rally today. But the point here is that, you know, if I was right, I could have been right up to here. If I'm wrong, I have this smaller type of loss. Where I'm right, I have 2, 3, possibly 4 times the amount. Any one trade, we don't know if it's going to work, but we do have to factor in the risk to rewards on any one trade. So it looks like I will be exiting Boeing today at the end of the day. All right, MasterCard. I did buy MasterCard yesterday, the 14th of October. I bought it because we had the 1050 EMA cross. This is a good crossover system. It's a good back-tested, quantified, long-term trading approach with an edge when the 10 EMA crosses over the 50 EMA. So I did buy it here yesterday at 276.43. I was glad that it sold off at the end of the day. I got a little better price and I was able to buy it in the value zone on a closing price. I get a little concerned even with crossovers when I have to buy them too high. Like the maximum I literally will buy is the 2 ATR channel, and I don't even like doing that. 1.5, I don't even like doing that, but sometimes I'll do it. I give a little bit more leniency as far as where the price is in regards to the ATR channels when it's a crossover. But anyway, moving up nice today, did hit 1 profit target here. As soon as we get 1 ATR away, this is the distance 1 here to here, here to here. As soon as we get 1 ATR away from my entry point, then I will kick into discretionary mode where I will use a trailing stop on MasterCard because it's a stock, right? If I'm using a moving average crossover on a ETF like the Qs or the SPY or the Diamond, something like that, then it's completely mechanical, 100% robot trade. I'll stay in the trade as long as the crossover is still in place, and I'll phase out till I'm out of shares, or my stop will be when the cross under happens. So anyway, so far good trade on MasterCard. All right, so I was just talking about mechanical trades. This is the mechanical trade. So I did buy the Qs, QQQ, NASDAQ 100. Bought this back on the 11th of October. I bought it because the 5 EMA crossed over the 20 EMA. This is a good back-tested approach to trading the Qs. As with MasterCard, it was above the 1 ATR channel intraday and closed lower, so got it a little better price. Happy to buy it within the value zone, within the green, the positive 1 ATR and the negative 1 ATR. Yesterday, it just moved sideways. Today, it moved up nicely and hit 2 profit targets. If we would have had the crossover today at this level, I wouldn't take it. I just have to let it go. But you know, on the day that I bought it, it was still in the value zone, which is good. So 2 profit targets on this. MACD is positive. This has moved, I guess, 1 ATR away from my entry, but because this is a completely mechanical robot trade, I'm not going to be discretionary on this. I like to have different trading systems, some discretionary, some mechanical. So this is going to be my mechanical trade here. And as long as it keeps moving up, I will phase out till I'm out of shares, or to the downside, if the 5 crosses back below the 20, then I'll just go ahead and get out of the shares that I have remaining. But anyway, nice trade so far on that. And then SPY, the world famous overnight SPY trade. So I know you guys hear this every day, but in case we have some new listeners, I do like to go over this so they can understand why I take this trade. But I do buy the SPY each day at the end of the day, every day, regardless of the technicals, and I sell it first thing in the morning. And you might say, why would you possibly do that? You trade technicals, and that is true, but this is based upon a long-term back-tested profitable approach here from Liz Ann Saunders at Bespoke Invest. But in this study, there was two options. Option number one is you could buy the SPY at the open each day, sell it at the close each day. And this is every day since 1993. So if you'd have bought it at the open, sell it at the close, bought it at the open, sell it at the close. Using this approach, you would have actually lost a negative 13.9% of your capital since 1993. But if you do the opposite, which is what I do each day, I buy the SPY at the close each day, and I sell it the next day on the open. So buy at the close, sell at the open, buy at the close, sell at the open. If you would have used this approach from 1993, you would have actually returned 634.2%. So there's a huge difference. Buying in the morning, selling in the afternoon, negative 13.9. Buying in the afternoon, selling the next morning, plus 634.2%. So past performance, no guarantee of future results. That is true, and that's true with any trading approach, no matter how good it backtests. You never know what's going to happen in the future. But what I find interesting about this is that we know the market has gone up since 1993. But what this is telling you is the S&P, all the returns in the S&P since 1993, all of them have come in the after hours, people bidding it up in the after hours and people bidding it up in the pre-market sessions. And you can see the chart. The blue line is the buy in the afternoon, sell in the morning. It's done very, very well. The orange line is the buy in the morning, sell in the afternoon. Has not done well at all. So for those of you who are day traders, keep this in mind. Most of the moves come in the overnight and pre-market sessions. There's not a lot of movement to be had intraday, right? And I like this chart because it shows what a good long-term tested approach with an edge can do over time. It doesn't go straight up. There's ups and downs and ups and downs. So you do have to be careful and position size correctly. But, if you have a good trading system and you don't put too much capital and commit too much capital in any one trade at any one time, then you can stay in and do this for the long term. And, I always mention this, but people understand long-term investing, but they don't understand long-term trading. And this is a perfect example of what long-term trading looks like. There's ups and downs, bumps and bruises, but imagine if you would have got right in here and, used a huge amount of your capital. For the next 2 years, you would have gone down. And I've been through this, not for 2 years, but in May, this approach lost about 80% of every single trade. But that was just May. If you look at my equity on using it, it looks similar to this. So, hit a yearly high today using this approach. So with that said, I did buy SPY yesterday at 295.95 and I sold it at 297.05. So it's moved up since the open, which is fine, but this was a nice quick overnight trade of more than $1 per share on SPY. So this is great. So I will be buying SPY again today at the end of the day and selling it first thing tomorrow morning. Jackson says, Greg, I'm new to your channel, but do you only buy these stocks within the last few hours of the trading day? I missed yesterday. Yes, Jackson, I only buy these stocks with literally like 3 minutes, 2 minutes to go in the trading day. I try to wait as long as I can. I'm definitely not going to buy anything with 2 hours to go or 1 hour to go. I buy at the very end of the day, sometimes within seconds of the close, because, like I said at the beginning of the podcast, the closer you can buy to the close of the day, in my opinion, the most valid price, the more valid the prices are. So yeah, I'm an end of day trader. I always buy everything at the end of the day. So literally I wouldn't even have to be around my computer until like the last hour of the day. All right. Just take a quick gander here. All right. So listen, this is the part of the podcast where I do like to talk about trader psychology. I like to go through Twitter. There's a handful of really good Twitter channels out there that put out good information, kind of specializing in trader psychology, good trading words of wisdom. And so, I go through them each day. When I find something that appeals to me and I think would be helpful for the group, I like to cut it out and talk about it. But this is from Scott Trades, at Scott Trades on Twitter. He posts really good information, has some good words of wisdom about trading. So if you haven't subscribed to Scott at Scott Trades, I would do so. I like to read his posts, always fun and entertaining and also helpful. But Scott says, if you're not okay taking small losses, you'll eventually take big losses and then stop trading. If you're not okay taking small losses, you'll eventually take big losses and then stop trading. And I have seen this over and over and over with people. They have in their mind they don't have to put a stop loss in. Oh, it always comes back. It always comes back. And a lot of times it does come back. But eventually you are going to run into a stock that does not come back. And you're so used to it coming back and then taking a profit, getting in something again, not adhering to your stop, it goes down, it eventually comes back, but eventually it is not going to work and you're going to take the mother of all losses. And like Scott says, eventually you are going to take a big loss that is so going to destabilize you and frustrate you that you're literally going to quit trading. And that's what I see from a lot of traders that quit. They had an idea about a stock, they didn't think it would go down, and then when it went down, they thought it would come back, and it just kept going down, and they're like, screw it, I'm out of here, I can't do this anymore. I rarely run into a trader that takes small losses, and over time has taken so many small losses it's ruined their account. I never run into that. It's always the people that had that one or two big loss they thought was going to come back. And let me tell you something. When I first started trading, about 4 years after, I took a mother of all loss on WorldCom. And wait, it didn't stop with that. Enron. I was the proud owner of WorldCom and Enron, and I thought it was going to come back just like Scott said here, and it didn't, and I took a huge, huge loss, and I almost did get out of trading at that point, but I didn't, luckily. But I wish somebody had taught me that back when I was a younger trader in my 20s, right? So when I read this, it really hit home, and I do not want that to happen to anyone, right? So the takeaway here is, position size correctly, find a position that has support underneath or has some other kind of setup where, indicators are coming into play, groups of buyers are coming into play. But when you are wrong, get out quickly, take the small loss. It's a little paper cut. I know it sucks. But can you imagine if I would have taken that first little loss on Enron or WorldCom? Oh man. That would have been fantastic. So yeah, I wish there was an older Greg that I could have talked to back then. Right. So anyway, thank you, Scott Trades. Appreciate that. And, this really did hit home for me. And so I do really want to put it out there with some energy, guys. Eventually, if you don't take your stop losses, you're going to run into something that just craters, and that's going to be it for you. All right. So thanks again, Scott. And it's at Scott Trades on Twitter. Hey, Jesse. Good to see you, my friend. Thank you for coming by. Jesse is one of my students. Actually, just got finished with the course at the beginning on Sunday. So I think Jesse's going to do really well. He put a lot of hard work into the course and he did really well, studied, watched the videos. Because when I do my private lessons, they're recorded so you can go back and watch them as much as you want. But if Jesse were a stock, I would bet on him. And if Kurt were a stock, my current client, I would bet on him. And if Anthony was a stock, I would bet on him, right? You guys all did really well in the class, and I think you're going to do just great. Now, don't you said had no idea you had a position in Enron. Yeah, I try to forget about it. That was horrible, Mount Doji. And not just Enron, WorldCom. But I didn't know what the hell I was doing, right? I just thought things came back. I averaged down and averaged down. I had no idea what I was doing. I made every single mistake in the book. But, after that happened, I actually went on a walk. I walked the coast of Oregon with my dog. I was so down. I was so depressed. And I was like, all right, I've got to figure out, am I going to quit trading? Am I going to learn how to do it? And I decided I'm going to learn how to do it. And I'm going to do it right. And I put in the work and I studied with a lot of top traders and authors and, put together the approach that I'm teaching you guys today. So, Jackson says, not just SPY, MABA. Yes, everything. Every single trade I take at the end of the day. Every single trade. I exit or enter as close as I can to the end. And I mean, if you have 4 or 5 trades, yeah, you can't wait till the last 10 seconds, right? I mean, you've got to do it in the last 5 minutes. But yes, all of them. Kurt, hey, bud. Good to see you. Hey, Greg, once again, awesome class last night. Yes, MJ, all Steve books are great reads. Yep, Kurt and I had a great one-on-one lesson last night. You did really, really well. We're in the part of the lessons where we're doing simulations, where we go through a stock on the chart, and I'm like, all right, Kurt, what do you do here? What do you do here? What do you do here? Did you take a trade? Are you in? Are you trailing it? Are you getting out? Did you stop out? What are you doing? I think it's the best exercise that anyone can do is go through their charts one bar at a time and act as if you're in the trade or not in the trade and how you're going to manage it. So I think it's a great exercise for everybody. Steve Burns says, I went from having enough money to pay off my house in March 2000 to a 50% drawdown in 2003. Yep, it's brutal. And Steve, how did that happen? I mean, what were you doing or not doing where you allowed yourself to have a 50% drawdown? Jesse says, I have listened to Moving Averages 101 at least 8 times now, have long commute, pick up something new every time. Yeah, I agree. It's like the best book you can read. That's why, Jackson, that's why I told you before our lessons start that I would really suggest that you read that book to give you a good base before a lesson starts. Kurt said it was very challenging. I learned so much. Man, I think you did fantastic. All right, well, let's get to it. Get through the charts and see if there's anything on deck for today. Where are we at with the market? 268. So we're off a little bit. We're off a little bit from the high. Apple's down today, which is kind of crazy, right? On a big day like this, and Apple is down. But Apple had its run up before anything else did. What I'm looking for in Apple, we're right here at the 30 ATR channel. 90% of prices generally get rejected by the 3rd ATR channel. If they can close above, it's very strong. But today, it looks like we might close under the 3rd ATR channel. And earlier in the day, we were at a 70 RSI, and that got sold into. So I'm really not a shorting kind of guy. But if there ever was, a couple combinations of, and don't do this, I'm not saying to short this, I'm just pointing this out. If I was shorting, this is the kind of signal I would look for. Rejected the 70 RSI, close under the 3rd ATR channel. But I'm not going to short this, but I was just pointing this out. We always talk about the buy side under 30, over 30, under the 3rd ATR channel, over the 3rd ATR channel. This is the opposite. So what I'm looking for on Apple is I'm looking for a pullback into value. We are overvalued by means of being above the value zone. And that's just what I consider. Anything over the value zone is, to me, is considered overvalued. So I'm waiting for a pullback into value because I want to buy at value, not overvalued. Look for some kind of sidewards movement. Look for a V1, V2 to the upside, maybe come back and challenge these highs. So nothing on Apple today. Adobe is doing well. Looks like it was having a little issue with that 50-day moving average above it is in the value zone. A good back-tested approach on Adobe is a 10-50 crossover. So there is no crossover here at this point. If we had a couple days down, had a V1, V2, if it happened right around the 200-day moving average, I might be interested, but nothing on Adobe. Advanced Micro Devices, been 3 strong up days. So something I want to mention right here, see how we go up and now up and now up, but you see how on the first day we had a lot of volume, we went up higher, we had less volume, now we're higher, we have less volume. That's somewhat bearish to me. If you start going higher and higher and higher on less and less volume, that seems bearish. Now, big picture, this looks positive actually, but I'm just talking in the short term. So on my Advanced Micro Devices, we're above the 1 ATR channel. I'd be looking for it to pull back into value and look for some kind of V1, V2. Of course, Amazon we took yesterday with that higher low V1. MACD went positive, closed over the 10-day moving average. We hit 3 profit targets today. It's at a 52.09. If we close below 50 RSI today, I will go ahead and just take the whole trade off. Because, you know, the resistance was the 50. Now we got through the 50. But if we can't hold that 50 RSI below us now, I would go ahead and just take the entire trade off. But as long as it holds above 50, I will continue to hold this trade. Tomorrow, if it closes above 50 and then tomorrow it drops below 50, then I'll take it off and just lock in the profits. But this has been a good trade. Boeing, of course, we talked about this. This is the one stinker of the day. It looks like we're closing below the low, the halfway of the washout bar. So it looks like I will be getting out of Boeing today. Caterpillar, real strong, big move over the 200-day, which is always real good when you can have a strong day over the move on over the 200-day, but we're too high in the value zone. See, we're getting close to the 3rd ATR channel. And generally, I don't like to buy anything if it's over the 1 ATR channel. If we have a moving average crossover, then yes, I loosen up the standards a little bit. But outside of a crossover, I'm not going to buy anything over the 1 ATR channel. And this is over the 2 ATR channel. So the rubber band's getting pulled a little tight here. I would have to wait for some kind of pull back into value and look for a V1, V2. DDM. All right, so this is one of the charts here on Trade Navigator that I'm having an issue with. DDM is having a 1050 EMA cross today. That's a good back-tested approach. It does test well. However, I'm a little concerned, and I'm going to go ahead and just pass on this trade. And the reason why, DDM is the double leverage Dow, but I already have the Qs, which of course is an index, so most likely it's going to follow what the DDM is going to follow what the Qs are doing. And also, you know, we're getting up close here to previous resistance. So being that it is, you know, above the 1 ATR channel, we're right at previous resistance. I'm just going to pass. If I didn't have the Qs, I would take this trade, but I'm actually looking at another index that I like a little bit better. But this is a good, valid, back-tested approach when the 10 crosses over the 50, and then staying in until the 10 crosses back under the 50 if you're trading it mechanically. So I am going to go ahead and just pass on this trade because it's up here above the 1 ATR channel, and we have previous resistance to the side, and I also have Q, so I just don't want to be too correlated. Hope that makes sense. Here's a picture of the Dow. This is going to look very similar, but you can see, you know, we're right here where that previous resistance was. So I'm just going to pass on this trade today, but it would be a valid trade, 1050 EMA crossover. Walt Disney, not really participating too much today. I would really like to see Walt Disney go under the 200-day and back over. Ideally, I'd like to see it get down here to the 3rd ATR channel, 250-day moving average, 30 RSI area. This would be a real great spot to pick up some Disney down here. But it's not quite there. I'm considering selling a put down here to the price that I want it for. But I'm going to wait a couple days. It's barely up on a big up day. If we have a down day, I imagine it's going to be going down more, and then I get a little more premium for that. So nothing on Walt Disney today. Etsy is having a nice day today. Actually sold Etsy here yesterday to make room for Amazon. I didn't want too much technology. I had the Qs, I had Amazon and Etsy. So if I wanted to the Qs, Etsy, what else did I had? I know I had something else. But anyway, I had three technology stocks, and that was too much for me. So I got rid of Etsy here to pick up Amazon. So it was about a wash. So it did reject the 100-day moving average. If I would have still kept the trade, I would be getting out today with the rejection of the 200. So nothing there. How are we doing on time? All right. Ford, big strong day today. Looks like it might cross back over the 200. Not quite there yet, so nothing there. Facebook, monster. I think Steve has Facebook. I think Steve still has Facebook. So fantastic trade. Steve bought Facebook back here with the nice close over the 200-day, and it moved up nicely his way. So congratulations, my friend. That's a great trade. But nothing there for me today. Five below. This is kind of the one that got away. I was considering buying five here with this nice V1 close back, higher low close back above the 200. But I didn't take it. I ended up taking something else. So anyway, this has been a nice move here. We're above the 1 ATR channel. For me to get interested in five, I'd have to have a pullback in the value, look for a V1, V2. I did add GDX here. This is the gold miners ETF. I do want to point out, for especially my students that work with me right now, see how we have the low, we rally, we go green on the MACD, we make an equal low with less MACD, and it did rally from there, but now we've gone lower and we even have less MACD. So this is called a triple bottom with a bullish divergence. See how deep this is, and now this is not as deep. So as far as the possible setup, this does look good, but the setup looks decent, but no trigger. So the trigger would be close under 30, back over 30, maybe hang out here at the third ATR channel, look for a V1 or a V2, or ultimately down to the 200. So big picture, it looks good, but we still need some kind of trigger. So nothing there. Gold, this is regular gold ETF. I'd be looking for a 520 EMA crossover to get interested. Google having a strong day today. What I would be waiting for on Google at this time would be a 1030 SMA crossover. That's a good back-tested approach, or just simply a pullback into value, because now it looks like we're going to close above the 1 ATR channel. Now I want to pull back into value, look for a V1, V2. So there's going to be a lot of that today. Goldman Sachs, look at this. Looks like it's up a huge amount, right? But it gapped way down, bounced right off of the 200. Actually, this isn't, this is a pretty nice V1, right? It's like a huge V1. Day one, day two washes out day one. Looks like it's going to close above day one. Only thing is I already have MasterCard, which is kind of finance related. And, what would I use as my stop? Well, I'd use a halfway of this. I would use a halfway of the bar here for my stop. I think what I'm going to do, I think I'm going to let this one go just because I already have MasterCard. But that is one hell of a V1, higher low V1 bounce off with MACD crossover. So it's really not bad. It's not bad, but I'm just going to pass because I already have MasterCard. IBB, looks like we are having a 520 crossover here. So if you just wanted to take this mechanically, I mean, it is a good long-term back-tested approach, but I don't like where it is today with the 50-day moving average. It rejected it in the 1 ATR channel. So, when I get in a crossover system and mechanical crossover system, I trade it mechanically, but I do give myself some discretion on whether or not I'm going to take it based upon, what it's moved. It's already had this nice move up. I can see it did reject the 1 ATR, the 50-day moving average. We have the 200 here. The 100 here. So, look, it wouldn't be the worst trade in the world, but I'm just going to pass. Intel, above value, I need it to pull back. Russell, so I am considering buying the Russell here today, just because we had this move up above the 100-day, the 200-day moving average on some strong volume. The 200-day is at 151.19 on my charts. Right now it's at 151 29. It's right in the middle of the value zone. It is a 50 RSI, 52 RSI. I like this better than the other indexes because it's in value and my risk to reward is very small. I would just play this off of the 200. So if this does close above the 200 today, I am going to go ahead and buy. And it looks like we have a moving average crossover here as well. But if I'm wrong, I'm going to be probably most likely wrong pretty small because my stop is right underneath. So we'll see how this closes today. Johnson & Johnson, big day up, rejected the 200, nothing there. How are we doing on time? 15 minutes. Okay, Coca-Cola, really nothing on Coke. Just give me a second, please. All right. All right. Lockheed Martin, nothing there whatsoever. MasterCard we have. We did buy that with the 1050 crossover. It was a little high, but it was still in the value zone. So I did buy at one profit target today. MO having a big day today, nothing there. Merck, just choppy, nothing. Microsoft, big strong day, challenging all-time high over here, but way too high for me to buy here right now. Way too high. I would expect a pullback, right? And I would be interested in buying that pullback. And there's a lot of people that won't be buying here. They're waiting for a pullback, so there should be some built-in buyers. Netflix, down today, so it's a little weak today. I'd be looking for a pullback here. This big bar here, this big bar, most likely will hold some support if we come back down here. So I'd be looking for a V1, V2 down in this range would be ideal. Nike, very strong, but above value. Again, I need some kind of pullback. Philip Morris, been battling up there with the 200-day. Boy, that 200-day has really been acting as resistance, but it's too high in the channel. PayPal, nice big strong day today. MACD crossover, looks like we're right to the 50 RSI right now. So would I buy this here? No, I wouldn't. It's range bound now, but I definitely would be looking for a day or two pullback and looking for a higher low V1, V2. We actually did buy PayPal here with the close back above the 250. Then we had that big strong day. We hit 3 profit targets and then got out at the end of the day, but it's moved up since then. Q's, of course, we bought that a couple days ago with the 520 crossover. It's been a great trade, 2 profit targets today. SPY, we had that nice overnight SPY trade. Going to buy that again today. SSO is another one. This is the double leverage SPY. Let me take a look here. SSO is another one where we have the 1050 EMA cross. Whoa, what's happening? 1050 crossover, but I'm just a little concerned taking this 1050 crossover right here at this previous support. And again, I already have the Qs, right? So if I add the SPY and I add the diamonds, I'm just piling onto indexes, and I already have those, and I want to keep a little diversified, right? So I am going to pass. And like I said, I like the IWM better. It's a different kind of trade. It's lower in the value zone, and I feel like the risk to reward is better. So I'm going to pass on that. Nothing wrong with the trade, but just based upon what I already have and how I view things with ATR channels, and that it's up against those previous highs, it concerns me. Bonds getting whooped up on here for sure. We're at 41.27 RSI. If we could get down here, if we could have the combination of the 100-day moving average at the same time we have the 30, this would be a sweet dip buy to buy here. Tesla, strong day, closed above the 200, but look, we're up at the second ATR channel. It's just too high for me in the channel to buy. I'd be looking for a pullback into value. I'd rather buy things at value or under value than over value. Twitter's having a good day. A little bit of a V1 bounce off the 180 or the 100-day moving average back in the channel. I mean, this isn't bad. It's not bad, but again, I have Amazon and I have the Qs, so I don't really want 3 positions. Look at this, everybody. UNH, holy smokes. So they had earnings, huge earnings, 8.26% up. Can I buy it up here? No. Look where it hit the third ATR channel and pegged it, right? Kurt, if you remember, we were talking about big bars last night. You know, from a Fibonacci standpoint, we should, if we come back, we should be able to hold somewhere back into here. So there's really nothing I can do on UNH here unless it comes back into the value zone. Oil is actually down today. All right, so nothing on oil. VIX. You know, VIX is starting to look very interesting to me, guys, and especially to my current students. You will notice, look at this divergence. We have this bottom. We have this nice rally with nice green MACD. We have now come down, made a lower low, but look at the MACD bars here. This is half of that. That means the momentum down here was twice as strong as this momentum. And the implication is if you start running out of momentum, then, you know, the implication is that you might be going the other way. So we're at a 38.66 RSI. You know, I might want to consider buying this if it goes under 30, back over 30, or even has maybe a V2 tomorrow with the false breakout to the downside. If we have a V2 tomorrow, this day will be a false break of this low. Went below, whoop, pops back in either today or tomorrow. And you know, with the context of this being a double bottom with a huge bullish divergence, this is, you know, what I learned from Dr. Alexander Elder. But yeah, double bottom, bullish divergence, but we have no trigger yet. Verizon, big strong day, right up here against previous. Well, it looks like we actually took that out, didn't we? Let's take a look. See. Yeah, we did. So we've broken out, which is good, but it's still too high for me to buy. I'd look for a pullback. All right, how we doing? Walmart, you know, Walmart had this false breakout a couple days ago. Here we have a high, MACD bars, very strong to the upside. We pulled back, had red MACD bars, made a higher high. Look how little these bars are compared to over here. So, and then the very next day we collapsed back into the previous range. So this is a false breakout, double top with a false breakout and a bearish divergence. So this doesn't look very bullish, right? So I'm going to see how this reacts once we get back up to here, but no, I'm not going to do anything with this today. But from Dr. Elder's standpoint, this would look very bearish. Energy. So we do have a higher low V2. Here's day 1, day 2, day 3, day 2 washes out day 1. Looks like we're going to close above day 1's close back in the value zone. The only thing that concerns me here, though, is that we already rejected the 50 RSI today. So I'm going to let that one go. XLF, big strong day today. I need to pull back into value. Real estate. Nothing really there. Utilities moving down. That's money coming out of safety ETFs and assets into stocks today. So nothing on XLU and healthcare. Big day today. Big strong move back. Well, yesterday we did close above the 200, but again, now this is too high for me to buy. I need to pull back. So actually, the only thing that I'm looking at today, the only thing whatsoever actually, is the IWM. If and only if it closes above 151.19. Right now we're at 151.29. So yeah, that's going to be it. So let's take a look at our current positions here and see. Okay, so Amazon, it is holding a 50 RSI, so I am definitely going to keep holding that. BA, we're going to sell this at the end of the day because the close below the halfway of the washout bar. MA's doing fine. We hit the one profit target. Nothing that we have to do there. Q's doing fine. This is mechanical. Hold on to this trade as it moves up, phase out, or if we have a 10 cross back below the 50, that will be my stop with the remaining shares. And then SPY. JT says, Steve, I was in the same position in the 90s. Enough money to pay mortgage, but did not sell. Ugh. Steve says, I did not know how to cut losses short. Yep. Steve says, I did not understand moving averages signals in RSI in 2000. Either did I. My gosh, if I had a time machine, how much money that would have saved and or made me, guys. So, you know, at least we're talking about it today. And thank you, Steve. Thanks for teaching us about it in your books. All right, so, look at that. Apple's actually down today. So DDM, that would be a valid 1050 EMA signal. I'm just not taking it. IBB would be a valid 520 crossover, but I'm not taking it because of where it's at with the 50-day. IWM, I will be buying this today. This is a Russell 2000 if it closes above 151.19. So if I'm wrong, it gives me a very small amount to possibly be wrong. You know, Steve's just talking about RSIs and moving averages and so forth. So, the close over the 200-day just by itself does not backtest that great. But today we have the MACD crossover as well. So that adds some bonus points to IWM. And like I said, I like where it is in the value zone better than I do the other indexes. And I already have exposure to the other indexes by the Qs, right? I'm going to have the overnight SPY trade. I have MasterCard, Amazon. So yeah, that looks like about it other than selling Boeing. So I am selling Boeing today for sure with the close under the halfway of the washout bar. Amazon's keeping steady with 3 profit targets. MasterCard 1 profit target, but it's doing fine. Q's 2 profit targets, mechanical, and then I already have it programmed in to buy my SPY at the end of the day. Yeah, VIX is be interesting. Here's the low of this previous low, 2180. If today we closed above 2180, this would be a false breakout to the downside and back up into the range. It's not there yet, but if it does, that would be a false breakout to the downside with a bullish divergence. All right. So as long as IWM closes above 151.19, good to go. So we have about 1 minute and 15 seconds left. And then I'll get to all the comments and questions. So if you have any, if you're not sure about something, please let me know, all right? All right, so about 30 seconds. So the only thing I'm buying today is IWM with the close back above the 200. Sounds like the beginning of a song. All right, so I got out of Boeing. We got back into the SPY at 298.88 and IWM at 151.39. All right, so Boeing was one of our losers this week, so we're going to get rid of Boeing. And we're replacing that with IWM. And we bought IWM here at 151.39. You know, now this trade offers a good risk to reward, everybody. If we have a close below the 200, I am out of there. But that's the key to trading, right? Get as close as you can to some support. If you're wrong, get out quickly. If you're right, have a good risk to reward to the upside. So IWM and then SPY, we got into SPY. Our new entry on SPY was 298.88, and so that is for tomorrow. All right. So we have Amazon. We have our new position in IWM, which is the Russell. We have MasterCard, Qs, and the SPY. So I think we're pretty well diversified, right? I mean, we have Amazon, which is technology. We have Qs, which is technology. I generally don't like to have more than two, correlated type of positions. IWM is mid cap, so that's fine. MasterCard is some, financial, and then SPY is also an index for overnight. Are they all the right positions? Did I make all the right choices today? I don't know, right? But I did the best I can, trying to keep correlation and everything in mind. So listen, before we get to questions and answers, hope you guys don't mind, but I do put in my little plug each day. But I do offer private one-on-one coaching, teaching, and mentoring lessons in the evening time via Skype. This is a one-on-one course, so it's one-on-one. It's 5 2-hour sessions. You and I live one-on-one, and I teach you everything that I know, and what I do here on the podcast and live stream, I hope it's helpful. But I can promise you, I guarantee you that doing the one-on-one lessons with me, you're going to get a better, deeper understanding, because here I'm not asking you questions and having you break it down to me. Right. In the one-on-one sessions, I teach you, then I have you break it down to me, and you have to keep breaking it down to me till I feel good enough that you understand it. Right. And you have to understand something pretty well if you have to teach it back to me. So, we do a lot of chart study. I have you take controls, break down the charts. What are we doing here? What are we doing there? Give me the positives, give me the minuses. So, it's a pretty intense course. And, like I said, it's five sessions, about 2 hours. Sometimes they go 2.5, sometimes they go 3, but I keep going until I know that you understand what I'm teaching you. So, if you're interested, it generally just starts with a free Skype phone call or a free Skype call with me. I just want to get to know you a little bit better. I want you to get to know me a little bit better just to see if we're a fit. It's a free call. There's no obligation. Trust me. I only want to work with somebody if I really feel like they're going to get something from me, right? Because I put a lot of energy into these lessons. They're exhausting sometimes, right? But I want you to get your money's worth. And it's really important to me that my students do well. I mean, it's very important to me. So I put a lot of energy in, and I think you'll learn a lot. So, if you want to have a free Skype with me, just to see if we're a fit for each other, I just want to know, more about you, how you got started, how you're trading, what your challenges are, what your goals are, and then I'll put together a lesson plan based around that. So if it's of interest, the price is in the description of this particular video, and then my email's there as well, or you can reach out to me on Skype. I mean Twitter. I always get those confused. And then lastly, if you like today's podcast, if you're learning something, please do me a favor and hit the thumbs up button. It helps people out there find the channel. And, if there's a young Greg Gossett out there with a lot of money and young, I I wish I would have found this channel back then. So, maybe there's somebody out there that's in that exact same position. I would have really liked to get a hold of that person and, teach them something so what happened to me does not happen to them. So if, you can help me do that by hitting the thumbs up button or sharing it on social media, that would also be cool, right? So, all right, guys, so let's take a look and see. Okay, so Steve said, I did not know how to cut losses short. Yeah, I did not understand moving averages and RSI, right? JT said I sold a break even. Murat says, hi. Hey, buddy, what's going on, Murat? Murat's our friend from Norway. Jackson says, thanks for the insight. I'm a babe to trading, and I read this book. And I'm reading this from every book, cutting losses short, but having enough to pay mortgage to only having 50% really puts it in perspective. Yes, it does. Jackson says, planning on reading it 3 more times before we start mentoring. Good. More times, the better. Steve Burns says, yes, I am holding Facebook. Fantastic, bud. Congratulations. Look at this monster trade. Fantastic. Murat says, but VIX only has 2 bars in the red. It may continue red and get even deeper into the red. It hasn't formed the bottom yet. This is not a bullish divergence. Well, I'm looking at VXX. I'm not looking at VIX. I'm looking at VXX. And you can see clearly here, this is lower than this bar over here, Murat, right? This is lower than this. And this is halfway of this. I mean, let's look at the regular VXX and see. Yes. See, you're right. On the regular VIX, pretty close though. Pretty close. But I don't look at the VIX chart. I look at the VXX chart. And in the VXX, we do have, it's actually even lower. So tomorrow, if we popped back up here, making this bar a false breakout to the downside, it might be interesting. I don't know. We'll have to see. It wouldn't be interesting to me if we didn't have this bullish divergence, but we do. Bing He said, exited SEDG with a small loss, bought half position of PODD as weekly chart seemed too high and overbought. Well, all I can say, Bing He, again, it's a small loss. And for you to be a profitable trader, having small losses is acceptable, right? It is acceptable. So just keep with your plan. Get out when you're supposed to, even if it's a small loss. Eventually you're going to have a big win that comes along. I promise you will. Let's see if I have that PODD. Okay, I mean, yeah, it's it's a V2, right? It's a V2. It did gap, but it closed the gap, which is good. Did close above the 50 RSI. Let's look at the weekly. Yeah, the weekly's over. Weekly's a little over, but I like this. Yeah, I like this trade, Bing He. If it were me, I would use halfway of the washout bar as your stop. And then as we discussed, second ATR channel for your first profit target, and maybe second for your second profit target. Or because you're so far away here, I mean, you might use the one ATR as your first and the second as your second. But I like that trade. JT says seasonality for XLY. Starts October 17th. Amazon and MACD are part of XLY. I will be watching MCD in the coming days. Oh, interesting. Good to know. Yeah, sometimes there's stocks, like JT's mentioning, that, seasonally they do well, and this time of the year, seasonally they do well. But yeah, I mean, it's, looks like we have a 520 crossover. I don't know whether or not that's a valid crossover. I haven't back tested that. But good to know. Jesse says, hey, Greg, my IWM shows 200 SMA to be 152.09. where yours is 151.19. This puts the 200 well above current price. Could explain reason again? I can't remember. Yeah, so I have my chart set to factor in splits and dividends, where like if I look, let me take a look here. So if I put IWM here, you see how Schwab, so does this look similar, Jesse? Does this look similar to what yours looks like, where it's under the 200-day? And the reason why is because Schwab and I think TD Ameritrade, they don't allow for the option to, theirs does not take into account splits and does not take into account dividends, where on Trade Navigator, I have an option here. See, if I go to edit chart settings and I go to price, see how it says show prices unsplit? Your prices are showing unsplit. My prices show split. So, you know, listen, it doesn't mean that mine's correct and yours isn't correct. All it means is you need to follow your chart consistently, because sometimes I'm going to get in, like this trade I took. Maybe tomorrow it's going to go up and that's great for me, but you didn't get in and you didn't get in. But maybe it's going to go down for me tomorrow, but on your charts you didn't get in, so you're not going to have that loss. See what I mean? I mean, you might want to check with TD Ameritrade and see if they have a setting on there that allows you to adjust for, you know, I'll show you one more time. If they have a setting that you can click that shows prices split. Right now, mine are unsplit. Or mine are split, right? Yours are showing unsplit and taking into account dividends. So I'm sure they'll understand when you tell them, say, look, right now my chart is showing prices unsplit. Is there a way to show the prices split? And you know, it might, if I click on this button right here, it will do that. So it's literally just a button click. But if you don't have it, it's fine. Doesn't mean my charts are right and yours are wrong. You just have to follow your charts consistently and not switch back and forth. So I hope that helps, Jesse. But yeah, I would ask TD Ameritrade if you can show your adjust your charts to show the chart adjusting for splits and dividends. Murat says Zynga is now at 620. Oh, nice. Nice, nice, nice. So you're up, Murat's up 7.5% since entry. I think you bought it back here, right? Did you buy it back at like 581? I seem to remember this was a little bit of a while ago. Murat says 20 of 27 didn't like it yet. Thumbs up, guys. Thank you, Murat. Appreciate that. Thank you, JT. That's what you show. Yeah. So listen, if you don't have that option, Jesse, you just don't have it, right? Doesn't mean that you're not going to trade off the 200 or anything else. I mean, you just trade the way you have your chart set up, because in the long run, it's going to even out. Johnny, what's up, buddy? Good to see you. Good to see you. I will have a great walk. Thanks for coming by. Jesse says, thanks, Greg. Appreciate it. Jackson says, Greg, I'm delayed in watching your YouTube video. Been back clicking to understand everything, but thanks for your transparency. You are welcome, my friend. Bing He said, I just learned that EMA may be different in different platforms. It depends on how far back the platform is. I think only SMA is same for platform. Oh, you bought on September 11th. Okay. Look at that monster trade Murat had. I remember that. I remember that symbol. We haven't traded it for a while. So you bought it approximately right there. Look at this, guys. Beautiful. Beautiful trade. So yeah, Jesse, I would ask and I would see if they have that option. Like I know TradeStation does not have it, but those are the settings that I use based upon what Steve instructed me on his, because he has it set the same way. But you just follow what you have, because sometimes I'm going to take trades, maybe get in a little earlier, and the next day they're going to crash, and you will have not got in it, right? And then sometimes it will work the other way. Check with TradingView to make sure the numbers match. Okay. So last night I was cooking something and Katie wanted in, and she comes in, runs around, and she had just been skunked by a skunk, like big time skunked. Like the whole house smelled, I mean, it still smells like skunk. She's running around, going up, rubbing up against stuff to try to get that smell. And I took her out and I washed her like a couple times, but yeah, if you walked into my house, you would definitely smell skunk. I don't know how long it will last. So that was fun. Oh, Johnny, you had UNH today. Sweet. Sweet, sweet. Yeah, I had it. I had it also up until, I don't know, a while ago. Can't remember when I got out. I think I got out here. I think so. Pretty sure. Yeah, I believe I got out. But I would have gotten out here also, right? Bing He, if you're still, or not Bing He. Yes, Bing He, if you're still listening, if I had not gotten out here, I would have gotten out here with the close under, and then this would have happened, right? It happens all the time, and you just never know. But this was earnings, right? This was earnings, so I would not have stayed in through earnings anyway. I never hold stocks through earnings, because in this case it goes up, but in many cases it could have done the exact opposite. Jackson says, guys, FYI, if you ask Trade Navigator, which isn't cheap, no, they're not, but they will give you a 1 month free trial, even if it's to get a feel of what Greg uses. Yeah, I mean, I really like Trade Navigator. I mean, the last month and a half has been a pain in the butt with the data problems they had, as you guys know. But I've been using them for over 20 years, and I've never had those problems until recently. But they're switching over data services. But yeah, it's good, but. Too, though, if you use Trade Navigator and then you go to something else, it's going to seem a little strange as well. But yeah, they do offer a one month trial. Bing He says, Murat, what is your cut loss strategy? Zynga came down and reached a low on October 7th, October 2nd. Bing He, there are a lot of different exit strategies, right? Sometimes you're going to set your stops a little wider and it will keep you in. Other times, the price will come down, hit your stop, and you wish you would have placed it a little closer. That's the thing about trading. It's never perfect, That's why I really feel like it's important to pick an approach and do it consistently. Don't try to change with the wind depending on, this one was a big stop, so I should use that one. I should use a big stop now. Or, a smaller stop would have worked over here. Now I'm going to start using a smaller stop, right? John says, you all too tired to thumbs up? Well, it doesn't take that much energy, guys, right? Hit thumbs up. Thank you, John. I appreciate it. Good seeing you, sir. Murat said, I had a stop loss at 550. All right. So, he bought at 576 approximately. He had a stop loss down to 550. So he gave it a wide berth. And it didn't hit, and it worked. All right, well, I'm going to start saying goodbye to everybody. If you guys have any other questions, please let me know. But Jesse, thank you, sir, and I hope that helps. Yes, the 200-day is going to be different on different charts, but CFTD Ameritrade has the option to adjust for dividends and splits. And Murat, thank you, sir. It's good seeing you. I appreciate you coming by every day. I really do. You always have great input. Jesse, thank you. And let me know what TD Ameritrade says. Okay. And John, good seeing you, my friend. Thanks for the thumbs up push. Being he. Good seeing you, my friend. Hope you have a good rest of your day over there. And keep positive. Keep positive. I know that was kind of brutal on OC with getting out and then rallying, but that's just how it goes, right? But you did have a small loss in that, right? I think you had a small gain actually, or it was close, and that's fine. Jackson, good seeing you, and I look forward to working with you. So whenever you're ready, you just let me know. Johnny, good seeing you. Thank you for coming back. Hadn't seen you in a while. It's always great to see Johnny. And let's see. And JT, thank you, my friend. And nice trading today on your positions, and thanks for coming by. And let's see, Steve Burns, thank you, sir. I know Steve had a big day, and congratulations on your all-time equity highs today. So congratulations, and thanks for coming back, Steve. Like I said, it's always an honor and pleasure to have you here. It's always great. I'm always excited to have you here, and I know everyone else is, so it's a treat for all of us. Kurt, I will talk to you tomorrow for our final lesson. Look forward to that. You did really great last night, so I feel really optimistic about how you're going to do. I mean, actually, my last few students, Kurt and Jesse and Anthony, all did fantastic. And Mount Doji, glad you had a good vacation. Nice to have you back. Hope you keep coming back. Anthony, good talking to you, my friend, and thanks for coming by, and keep me updated. I want to know what's going on with your trades. And I think we got everybody. I think we did. Apologize if I left somebody out, but I don't think so. So, all right. Well, listen, I'm going to get out of here, and I'm going to go for a hike and enjoy the beautiful day out here and try to air out the house from the skunk smell. So Murat says, my stop losses are usually wide to not get shaken out. Right. Good idea. All right, everybody, have a good rest of your day. Go out and do something nice for somebody today. Just a smile or a wave or hold the door or something, right? We need more of that in our society. So it'll be good for them. It'll make their day, and it probably will be good for you. So we had a great day today. Hit a yearly high today for me, which I'm really grateful for that. That's always an accomplishment. And I hope to see everybody tomorrow during the last hour of the day. So take care, everybody, and hopefully we'll see you tomorrow. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice. and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.